Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Andy Swan, co-founder of LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking possibly one of the biggest recession-proof stocks that a lot of people call in the retail space, and that's Costco. Shares are down modestly so far this year, outperforming the overall market. But this stock's had an amazing run since the pandemic began, and it just seems like they keep getting stronger. They report monthly metrics at the beginning of every month, so there's more clarity around how this company is doing on a quarter-by-quarter basis. But what kind of data are you guys seeing out of LikeFolio? Is it continuing to be positive?
Yeah, it's kind of both. We have a positive angle and a negative angle. Overall, from a macro perspective, I think, and probably most important, is the macro perspective, and that is bulk shopping. Mentions that we track at LikeFolio are absolutely going through the roof, up 49% year over year, really driven by the back-to-school season, along with just this kind of palpable desire to save money on groceries that people have in the back of their mind at all times. You go into a Kroger, you go into a Target or Walmart and buy some groceries, and you just get shocked when the register rings everything up. And that's the type of thing that sends people to Costco to buy in bulk and try to save some money. And also, people are going to Costco a lot from a macro perspective because of gas prices. Gas prices are down somewhat because we've been hitting that strategic reserve a lot, but it's still a big concern for families, and Costco has really great gas prices if you go there on site. So that, again, is driving in-person traffic. So the macro scene for Costco is very good. From a competitive perspective, this is by far the biggest player of the bunch, what we would call a dominant player. But that's starting to shift a little bit, and we're starting to see mentions of Costco dropping compared to peers like Sam's Club, which is even up a little bit. Normally, those two, Costco and Sam's Club, are right in line. And then this BJ's is coming on very, very strong, starting to make a dent. And we see BJ's as a significant future competitor to both Sam's Club and Costco. So, like you said, going into earnings, this is a company that, that really tips its hand by reporting revenue every month. What they don't report is expenses and future plans. And so that's what Wall Street will be focused on. We think that they have a nice tailwind from a macro perspective. We think the competitive pressures are starting to come on. But again, this is a company with a really, really happy consumer base. And we think Costco's in a good position to take advantage of that over time.
Andy, your graph shows the dominance of Costco in terms of purchase intent volume. BJ's 1.4%. But you say they're a future competitor. Are they really coming on that strong? If we come back, when you come back a year from now, is that number going to be bigger? Because here's why. If you look at Costco, and everyone loves Costco, right? I mean, it's an enormously popular name, but its 5-year PE average is 36. It's currently at 38. It's not cheap. And how about this? BJ's PE, Tom, 21. Walmart, 26. Target, 17. So it's not cheap for where we are in the macro sense. And if BJ's is going to start chipping away, how much of a competitor is BJ's?
Yeah, I would call BJ's a nuisance to Costco right now. But I think that can change really quickly. We've seen it in other industries, especially when you look at, Costco's footprint across the country. They've kind of already got a big store in every major metropolitan area that they can get, whereas BJ's, the exact opposite story, that, they're really expanding at a breakneck pace. So I do think that there's competition coming. I think that the entire, bulk buying movement is underway, just getting started, and probably will accelerate from here. So I do think we'll see that graph be a little bit different next year when we come back on and talk about these companies. I do think BJ's chipping away. Look, it's not going to come anywhere close to second place anytime soon, but they do have that underdog type of quality to them that a lot of times at LikeFolio as investors we like to see. The established player can be the safe bet, the safe money, and you see that reflected in the PEs, but BJ's may be one to watch going forward.
Yeah, those are definitely outside of our realm here in the Midwest and Chicago area. I don't know where there's one even close to us at this point. But Andy, just looking at that, the graphic that you have, year-over-year change in purchase intent on a 90-day moving average. When I see Costco down 14%, that kind of, it's highlighted here for me because it seems kind of odd. But is this going to be based on a lot of comparables due to that pull forward from the pandemic at this point where, we get those monthly metrics from sales and comparable sales, those are still pretty robust. Maybe their valuation is warranted higher than their competitors.
Well, what they put out for August was plus 10% year over year, which has slowed down considerably from the fourth quarter, 13%. E-commerce, I think, is a big driver of this. It's really slowed down. Costco's e-commerce side from plus 7% to plus 4%. So significant decline there. I do think that there was some pull forward, but when we look at it versus competitors, that's not impacting Sam's Club. It's not impacting BJ's. There's something going on at Costco. I think they were just a bigger beneficiary last year, and so they have tougher comps. And a company that has tougher comps can be a tougher earnings play. But I will say that one thing I think investors are going to be looking for in this call is whether or not Costco is going to increase the price of membership.
Yes.
Remember, unlike Target and Walmart, you have to pay a membership fee to shop at Costco. And with Costco's extraordinarily high consumer happiness levels, we do think that the company has the opportunity to pass through a higher membership fee, which goes almost straight to the bottom line. And that could be a catalyst for investors to look forward to something, considering the way growth is slowing from high levels.
Yeah, and historically they've hiked those membership fees anywhere from 5 to 8% every 5 years. This is year number 5 for them. But the CEO actually just came out and said, it's not the right time to raise membership fees. He just did that and said that in an interview.
Yeah.
That's what I thought was pretty, astounding because, Kevin and I were talking.
You got to think it'd be poorly timed, right?
Right. I don't think it would reflect well on them. I don't think anybody's going to cancel their membership potentially because this is a stalwart in the industry. Once you get that membership, you typically keep it. But Andy, do you guys have an earnings score going into this report tonight after the close?
Yeah, we're really neutral on Costco. We normally are because of the way they report so much in advance on the monthly numbers. The earnings report for this company just isn't a big deal like it is for a lot of others. So we're neutral on this. But I do think it's interesting to look at the mix, especially BJ's versus Costco. And I think, it's at least one that investors could have on their radar with BJ's. And Costco on a dip is always probably a good idea.
Yeah, and Sam's Club on Walmart's earnings release a few weeks ago was the bright spot for Walmart in that report also, probably due to those gas prices. They have gas stations at those Sam's Clubs also. All right, great stuff as always, Andy. Appreciate it.
All right, thank you.
That's Andy Swan, co-founder of LikeFolio, breaking down the data here on Costco.